Welcome to another episode of the Solfate podcast, where we talk with builders and founders in usually the Solana ecosystem. This was a pretty interesting one because a couple of reasons. For one, Proph3t, he's anonymous. So as you approach this video, if you're watching on the video, you're just going to see Proph3t's his avatar, his PFP, which is actually not an NFT collection. Funny story about how he got it. He hand generated it himself. Anyway, but we talked about Futarchy, which is cool.
Amazing, actually. I'm not gonna lie, I'm here for the Futarchy experiment, right? And I am very bullish and have high hopes for this as a governing mechanism moving forward. Yeah. I'm not even gonna try to explain it right now because we talk about it a bunch in the show itself, and I will just sort of butcher it if I try to do it in a quick 30-second intro. But Futarchy is amazing, market-based governance, and I think it is going to make
super
big waves.
Interesting to see how it plays out.
Yeah. So, and Proph3t is hella smart, has a really cool story and really awesome background. Every show is worth listening to, but this one is especially worth listening to, you know?
Yeah.
So
before we get to the episode, if you are, I cut you off. If you're new to this whole concept of Futarchy, we actually have an article posted on the Solfate website that explains what Futarchy is as a high level primer, which is you'll even see throughout the episode, I am lost about at least half of the time in the episode. Read this primer if you're new to this whole concept of Futarchy, which almost everybody is. It's a very new idea. It'll help wrap your head around it. It helped me a lot, which is why we published it on the Solfate website. So I hope it helps people.
Yeah, I agree, I guess is what I'm saying. Also, ask more questions, Nick, if you're confused during our show.
I was taking it all in. I was processing it. I was letting it waft over me.
Okay, I'm glad. You should do that. Before, just a couple housekeeping items before we jump in. One, huge shout out to Phantom. They're the preferred wallet of the Solfate ecosystem. We're partnered with them, and we love working with Phantom. Also want to shout out to Unboxed. Unboxed is a dev shop that I own and operate. We are here for all of your Solana development needs and any other software development needs. Hit me up if you need anything. You can DM me on Twitter, or you can reach out through our website. And lastly, if you enjoy the show, which if you're here, hopefully you do enjoy the show, we would love if you would leave a rating and review on your favorite podcast apps or wherever you listen/watch the show. So thanks so much for being here. And with that, let's jump in.
Nothing in this podcast is or should be considered financial advice. Any opinions and thoughts expressed are solely those of the individual. They do not represent the opinions of any entity. Enjoy.
Can you give us the 30-second rundown of what Futarchy is? And then I'm probably going to pivot and want to talk about you and your journey in discovering it. And then we can really dive into sort of your current application of it. Does that sound good as far as a scaffold for where we're headed?
Yeah, that sounds great. So Futarchy is governance by markets is basically the elevator pitch. So in previous organizations, you had governance by people or voters. You could have a democracy where a bunch of people vote on what should be done. You could have a dictatorship where one person decides. You could have a small committee where a group of people decide. And in a Futarchy, the way it works is instead of all of that, you have a market really decide what should be done.
And okay, we'll get back to the why, because that's the piece I think is fascinating, right? Is sort of the why do we think this is an effective approach? Tell me a little bit about your experience learning about Futarchy and wanting to implement it. Sort of, how did that happen?
Sure. So I used to work in DeFi for a while, and I hated the DAO part of it. It was just really frustrating seeing over and over again decisions being made for the wrong reasons and people extracting money from the DAO treasuries and things just not being done the right way. And then I heard about Futarchy through a video, I believe. I don't really remember where I found it, but I think it was a YouTube video. And I was like, holy shit, this thing is awesome. This could totally solve all of our problems with governance, not just in crypto, but in the whole world. Like this could get rid of politics as like a thing. And it deserves to be tried. And no one had tried it before, like really. And there were a few people that talked about trying it, like Vitalik wrote a blog post and Gnosis on ETH said that it was going to do it, but no one had done it. And so I was like, okay, let me just drop everything and start working on this.
Casually.
And so that's essentially what I did. And now here we are.
That is awesome. I love the commitment to a good idea. Where did you mentioned sort of working in ETH DeFi? Obviously, MetaDAO is sort of in Solana. So when did that happen? Sort of, it sounds like they maybe coincided a little bit.
Yeah, so I worked in ETH, and I was excited about Sol, but I probably wouldn't have left if I hadn't gone to Non. I went to Non because my plan long term is eventually to disappear. I kind of like what Satoshi did with Bitcoin. I'd like to emulate that, and so since I was decided to do that, I was like, okay, I'm going to reset my social capital to zero anyway. Why not just build on the best chain that there is? And I did really believe that to be Solana. And so, yeah, I published MetaDAO white paper actually on November 10th, 2022, which was 2 days after FTX halted withdrawals, which was a cool time to be building on Solana. It was actually, I would say, a pretty good time. Like, I would ask questions in the Stack Exchange and they'd be instantly answered just because there weren't that many other people. I mean, relative to right now, I think there's less people building and like more resources available. And so, yeah.
There's definitely less capital available, but I agree. It's like from a DevRel perspective, from a community perspective, there was maybe more attention, like more focused attention, because we were like all in the trenches together trying to recover.
Yeah, a lot more focus on actually building, depths of the bear, or I guess at that point it was, when the bear was starting to settle in.
Yeah, maybe I should have paid more attention to the capital part, but yeah, so far haven't really taken much in the way of that.
That's great.
Well, I mean, it's not that great actually. Like I calculated the other day, and I think yeah, I mean, it's not a very financially prudent decision, but I feel like I have a lot of spiritual upside as well by doing this. So, yeah, and I'm sure MetaDAO will pay me
Spiritual
well.
upside. I like it.
Well, let's. You mentioned the sort of the MetaDAO white paper. I'm sure some of that has evolved over the last 2 years, year and a half. What is, I think the conversation's already sort of teasing that like MetaDAO is something Futarchy, but let's talk about MetaDAO and your vision for it.
Sure. And so, yeah, like I'll make a distinction between where I want MetaDAO to go, which is what's put out in the white paper, and then where MetaDAO is today. Because so the vision is broader, like it's using Futarchy to accomplish something, but at the time there wasn't really any Futarchy to begin with, and so I figured let's just like build Futarchy so that people can kind of understand what we're doing in the first place. But the overall vision is like you have lots of big companies in the world, and big companies can exist because there are benefits of being big. Like you have economies of scale, you have economies of scope, you just have benefits of like aggregating capital and people together. And today, the way that's all done is like through this bureaucratic system where you essentially have a hierarchy that like all reports up to the CEO and the board of directors, and everyone is just part of these like divisions and part of this broader empire. And the core idea of MetaDAO is instead of doing that, like you want to have a big organization that can coordinate large amounts of people and capital. But instead of having this hierarchy of like a CEO that's like accountable for the overall mission and vision of the organization and like responsible for safekeeping that, you instead allow people to be autonomously executing. So like it's called MetaDAO because it's supposed to be like a DAO of DAOs. So you would have entrepreneurs who are like building these startups, um, and they're all leveraging the common assets of the MetaDAO. So like, for example, you could have multiple of these startups leveraging a common brand, which is like one thing that companies benefit a lot from, right? It's much easier to sell a customer if they already know your brand. But a problem that you would have if like you just allowed all these startups to leverage a common brand is they would exploit that brand. Like you have this common goods problem where like it's always an incentive to exploit the common resource as opposed to provide back to it. But Futarchy could be a mechanism that actually prevents that from being the case. I'm sorry, I know that's like a little in the weeds, like organizational design, but the high level, I guess, like elevator pitch is imagine you could have a megacorp that was organized, like something that had the power of a megacorp, but organized as like an amalgamation of startups that operated relatively autonomously is like MetaDAO's core idea, and I think that's only possible through Futarchy.
I'm struggling to think about the delineation. This is an issue I have with all DAOs, by the way. Not like an issue, just sort of the how do you decide what matters to vote on in the first place, right? Like, does Futarchy sort of prescribe what level of granularity decisions should be made at the sort of DAO level versus like, no, individuals need to decide that? Or like how do you go about doing that?
So like I don't I mean it doesn't prescribe that today. We could potentially add something like that in the future. There is so in MetaDAO today, a proposal has to increase in the Futarchy markets, which like we'll get into, but essentially people have to predict that a proposal would increase the price of the native token Meta if the proposal were to pass. Um, and so that kind of puts a, like, if you have a really small proposal, it's not going to be impacting the price. And so there's really no point in raising it.
Got it.
And so it is really like big decisions that Futarchy excels at, like whether or not to fire the CEO or like fire big people, where to allocate budget, like whether or not to fund projects, whether or not to do like an airdrop or something like that, is where Futarchy is good at because those things impact the price.
Got it. That makes a lot of sense actually, right? Because you could have an organization that has, that's big enough that like you might have a sub organization within there where they have resources to do certain things autonomously, and they don't have to raise a vote on anything until they like, maybe need something from the broader MetaDAO, right? So it's like, hey, we want funding in whatever the token is that the DAO has, and like then it's a question of, well, is this going to benefit the larger group or not?
So right. like a sub DAO subcommittee sort of system in a way.
I wouldn't call it like subcommittee because that implies a hierarchy. So it's really like flat. So there's just like these. I mean, the way it would be, like obviously this is not implemented today. Today we just have a monolithic DAO, but you would have each of these member DAOs that like they could operate autonomously through Futarchy, but they're not like reporting to anybody.
Well, that's kind of how I understand like a sub DAO or subcommittee, where it's like you have a group of individuals that propose, maybe they make a proposal within the Futarchy and they say, hey, we want to accomplish this thing. They now focus on that thing. And so it's like a smaller subset of people. They have, funding, quote unquote, to focus on whatever their specific task is. And then they go and execute on it because they've been, maybe not elected is not necessarily the right word, but they've been, sort of elected to push forward in this like particular initiative as like the sub-brand subcommittee sort of thing. Is that kind of what you're trying to say? Or am I understanding that the way you're saying it?
No, yeah, I think that's a good way to frame it. And I guess
Okay.
a point, like the specific word I would use is funded. Like people are getting funded to do stuff. Like that's the core. Like it's really
Yeah.
money
Okay. Yeah,
that's
I can get behind
driving
that.
everything.
Gotcha.
Yeah.
I mean, can anyone raise a vote in MetaDAO? Like, can any member say like, "Hey, I've got a proposal," or like, what's the process there?
Yes.
Actually, that's the. And by the way, if you're hearing my questions and you're thinking like there is a logical path to sort of understand these things, like you can just say, "Hey, I'll answer that in a minute," and like start with what makes sense to answer first, right? If I'm asking the wrong question.
I think that's actually a pretty context-free question. So yeah, I'll answer, which is it's permissionless. So anyone you could right now in like 30 minutes, it would, I mean, once you understand the process, it'd be like a few minutes, raise a proposal to MetaDAO to execute any arbitrary SVM instruction. So you could create a proposal like send 10,000 USDC to James to do some branding thing for MetaDAO, or like improve the UI, and then you could go off and execute that. And yeah,
Nice. So like all of the proposals are attached to an SVM instruction or multiple.
yeah. Today it's one, and we're gonna move to multiple.
Okay. That's cool. And it does make sense because if like the primary driver is what do we want to do with this money? It's funding based. It's like most of these proposals are just send X amount of tokens to Y address. Um, and then obviously like is there some kind of accountability for doing the thing that you said you would do in the proposal?
Yeah. So I think we're still figuring this out, but I think we could probably do something like you get paid just like over time as you work on the thing. So maybe there's some person that's like appointed to make sure like see that you hit milestones and you get paid out based on milestones. You can do it all at the end. I mean, I guess ETH, DeFi, and some of Solana DeFi DAOs do have like grants applications, and I mean, I guess Solana Foundation as well have grant applications, and they seem to figure it out. I don't imagine that what we do will be very different than that. I think that like those processes will generally work.
Cool. How far along is MetaDAO, I guess, right? Like you sort of mentioned like the gold standard that you're trying to work towards, and you've hinted a little bit at like this is what we do now, but maybe give us a better, you know, uh, vision of the current landscape. Like what have you guys accomplished so far? What does it look like today to participate in MetaDAO?
Yeah, so I would say we're like infant stage right now. So like everywhere I look around MetaDAO and Futarchy, I see issues that we need to resolve that are like huge issues that thankfully we can resolve. Like everything that I see is thankfully an engineering problem as opposed to a science problem. Like I know that we can fix all these issues. Like for example, we need to move to an AMM dev system because like today, there's just not enough liquidity in the order books, and it makes sense why there wouldn't be liquidity in the order books. And so there's that, and then fixing TWAPs and all this stuff. So yeah, I would say like if you were to put it in startup terms, we're like a pre-seed startup is how I would think about us. And so yeah, like very early, naughty. Like I'm talking about MetaDAO vision, but I don't really think about that often because I'm just thinking about like how can we get Futarchy fully, or not even like fully working, but just working at a more basic level that I would feel comfortable like another DAO using it and like securely.
So it sounds like you the way you're describing it, it sounds like it's still kind of in like the MVP. Like we're working on this minimum viable version of Futarchy,
Yes.
right? Like maybe a little past initial prototyping, but still trying to get to this like we think we could roll this out more broadly type of stage.
Yeah, exactly. Like, and that's in line with, so when we started, it was just MetaDAO. And soon, probably within a month or two, we'll be doing trials with like a few other DAOs for them to try out Futarchy either for the whole DAO or for like a limited part of their DAO, like they could use it to manage some of their grants. And then as we improve from there, we'll like scale it more, hopefully.
That's awesome. I wanna dig back into some of the why of Futarchy a little bit, mostly because like I am woefully ignorant, right? Like I actually bought, it's somewhere in my office, a book that you recommended, and I haven't read it yet. I just saw on your Twitter you were talking about some book that you read, and I bought it, and I plan on reading it, but I haven't gotten to it yet. So I'd love to chat and have you just sort of educate me a little bit on what's the theory behind Futarchy being the most efficient way to make decisions. I love the notion of a flat organization. I have an economics degree, so I love the idea that markets are highly efficient, and let's try to use markets to make decisions. I also think there's places where markets fail, so I'd love to hear the sort of justification for market-based decision making being something that should be used heavily, right?
Sure. And can I ask, is the book that you're referring to The Logic of Collective Action by Maker Olson?
That's one.
Okay,
That's the one.
that's an amazing book. It's such a good book. Actually, I mean, the book is good, but the first chapter is probably the 30 pages or whatever that totally shaped my thinking on how organizations work, because it was the aha moment. This is as I was starting to think about MetaDAO a year and a half ago, that made me realize that organizations are to some extent just math. It's to some extent just incentives. Of course, there's the human aspect as well, but I think you can get pretty far with just understanding the incentives at play. But so back to markets and why they're the best way to govern organizations, which I do kind of believe. I mean, so there are theoretical reasons why that's the case. And so to specifically explain a little bit more how Futarchy works. And so essentially what it does is you have a reference asset that you're trying to increase the price of. So in a corporation's case, this could be the price of its stock, which corporations are designed to increase the value of their stock, increase the wealth of shareholders. And then maybe in a government's case, it could be a financial asset tied to GDP, if that government wanted to increase value of GDP, or it could be some other metric that measures happiness, some financial contract that pays out relative to that. So it's trying to maximize its happiness or whatever. And so you have some reference asset that you want to increase the price of. And Futarchy, the way it works is for every decision, you have two conditional markets where you allow people to trade the asset in one market that's conditional on that action going through, and then another market conditional on that action not going through. And so if the action does go through, then all their trades in the not go through conditional market are reverted. And if the action doesn't go through, then all the trades in the action does go through conditional market are reverted. So you allow people to speculate on what the asset would be worth if the thing happened and what it would be worth if it didn't happen. And then you do the thing if the market speculate that the asset would be more valuable if it did happen. And then, so why is that good? Well, theoretically, markets are pretty efficient, right? Because say that there's a proposal right now to burn all of MetaDAO's assets. And that would obviously be very value destructive. That would decrease the value of Meta by a lot. And so if someone is willing to sell past Meta to me, so that's Meta in the conditional market, conditional on that thing passing, on it burning all the assets for the same price as normal Meta, or actually if they're willing to buy from me, I would be incentivized to sell to them, right? Because I'd be getting $500, even though that asset would be worth like, or whatever the number is, sorry. And let me know at any point if you want me to go over this, because I know I'm getting pretty into the weeds now. But there would be an incentive for me to sell because I'm selling an asset for more than it's actually worth. And I could potentially buy back if that like in that event happened.
So
yeah,
can I quickly just clarify something for myself? So people aren't actually voting on whether they think things will be worth more or less after this thing passes. That you're actually like saying, if this passes, I want this trade to happen.
Yeah.
So like you're actually voting with your assets. So it's not like ideologically I think that this is the right thing to do. It's like I am giving myself financial incentive to like, or rather I am aligning my personal incentives with this proposal, what I think this proposal is going to do long term, right?
Yes. And
so yeah,
that's why I don't even think of this system as voting. I think of it as just like you're trading, because there's been a proposal before that I thought was good for the DAO. And so if I was voting, I would vote pass. But the market was, I believe, mispriced. It was like the pass market was double the fail market. And I'm like, okay, this proposal is good. Like, it'll probably increase the chances of MetaDAO success by maybe like 10% or 5% or something, but it's not going to double its chances of success. And so I sold in the pass market because it was in my interest to do that, even though like this proposal is good. And so if I were just voting, I would vote pass. But it's not about whether or not it's good or bad. It's just about my belief relative to the market price that incentivizes me to trade.
Got it. That is awesome. I like, this should have clicked for me sooner, just sort of like seeing tweets and like the little bit that I have read about Futarchy. But I think for some reason in my brain, it was like, I thought of it as like voting on whether or not I think this will increase the value instead of like actual trading, because you do end up with like a much more, I think, realistic view of what people think that way. Even the example you just gave, I think is that, where you're like, yes, I still think this measure should pass, but I don't think it should pass by this much. And so you're actually selling in a situation where if it was just a strict vote, you might be, in favor. And so it's fascinating because then you get sort of passing levels that actually reflect kind of like the group's general perception of like the statistical likelihood of something happening, instead of just like, oh yeah, everyone thinks this is a good idea, so 90% it's passing. Instead you get like, yeah, 55%, and maybe 90% of people want it to happen, but like some people are taking advantage of this arbitrage, and this is sort of the degree to which we think it will be beneficial, as opposed to it just being an overwhelming majority.
Right. And the nice number thing is you get a number too. So like if your token has if there's 100 million tokens, and in the fail market, the token trades at $1, and in the pass market, the token trades at $1.05, then that means that proposal is adding $5 million worth of value, like quantifiably.
Yeah. Or at least that's what we're hoping for, and what everyone sort of collectively thinks will happen.
Right. That's at least the market's estimate.
Yeah.
But yeah, so then back to your question of like why markets are good. So markets have this theoretically nice property that, like, I'm not going to sit here and say that markets are efficient. Like, they're definitely not. That's like an economist's dream, but it's not reality. But markets, the question is actually not whether markets are perfectly efficient, but just whether they're more efficient than the alternatives. And so when you look at the empirical evidence, it turns out that they generally are. So like with presidential prediction markets, they've compared presidential prediction markets versus expert pollsters. and the presidential prediction markets win. They're better at predicting who's going to be president. The Google and HP both used internal prediction markets to predict various things. For Google, it was like they used prediction markets to predict when they were going to open offices, and then HP, they used it to predict printer sales. And in both of those cases, the prediction markets were predicting better than their previous expert forecasts. And then my favorite example is in 1984, when the Challenger space shuttle blew up. It took the government, I think, 4 months for them to determine that it was Morton-Thiokol's O-rings that caused the crash. But the market had priced it into Morton-Thiokol share price. Like their stock was trading far below the other government contractors within 14 minutes. And so markets like really do have like you see this property in practice. And like I think most people would be astounded if they go to a typical hedge fund or mutual fund, the amount of research that and data that they have on the underlying companies. And it's not because they like want to make those companies better, but it's just because that's how they make money. And so you kind of leverage people making money, wanting to make money, and then use that to make better decisions.
Yeah. Well, it's interesting because I think one of the big arguments that markets aren't efficient, right, is that like there are sort of a number of conditions in classical economics that are required for like a perfectly efficient market. One of which is perfect information, right, which means buyers and sellers all have perfect knowledge of sort of what's happening, and obviously that's not realistic. Right. I think asymmetric information is one of the biggest things that makes markets not efficient. However, what you're bringing up here is like hedge funds, for example, have huge incentive to get as much information as possible, and that information then directly flows into the market in the form of price action, right? So it's like I think the point you made that it's like it's not about is it perfectly efficient, it's about is it more efficient than alternatives is fascinating, because a lot of people want to get really ideological and be like, well, you know, is it perfect or not? And really I think we should be more pragmatic, and it's well, no, is this better than what we could do otherwise? And I wouldn't necessarily say that I'm convinced, but it's like incredibly intriguing to me. Like I'm fascinated to see this experiment play out, and I would not at all be surprised if like Futarchy is the most optimal way to make these big decisions. You know, like so again, I wouldn't say like I'm 100% convinced, but also it wouldn't surprise me because it seems incredibly logical talking about it.
What do you think would convince you?
I mean, probably just seeing it play out for a number of years and like seeing it regularly be successful is probably the biggest thing. I'm certainly convinced that it is something the world needs to try at a larger scale, right? I'm thrilled that you guys are doing it at MetaDAO because I think it needs to be experimented with, right? We've experimented with other forms of governance for tens of thousands of years, and when you sort of think about like the various ways that we could make decisions on a broad scale, we probably haven't tried most of them, to be honest, right? Like we've sort of stuck with a few variations on a few select things, right? Like we've got various combinations of dictatorship and republic and democracy, and most of our governance systems are just sort of like various percentages of like mixes of those,
Right.
You know, like on the scale of direct democracy to like republic to dictatorship, that, you know, that sort of thing. It's so something like Futarchy, I think, is a fascinating approach where it takes the idea of democracy where it's like everyone gets a vote, but but it turns it into something like it puts constraints on it in such a way that I think I think gives some natural checks, maybe is like how I'm thinking about it. Is like it doesn't really, I feel like people wouldn't vote the way that they would trade, is sort of what I'm getting at here. And I think the trading aspect of it forces people to be more honest with themselves about potential outcomes in a way that you don't get with just a strict vote.
Yeah. And if they do trade how they vote, then they lose money. And over time, they have less sway in the market.
Yeah. I think probably some people's pushback on something like Futarchy and really on anything that assigns like financial value to things is maybe the pushback that like it doesn't encapsulate everything that matters. But you actually brought that up 5 minutes ago, maybe without meaning to, where you talked about maybe having an asset that sort of tracks like an index of happiness in some way, right? Like I think what people don't understand about economics is it's not really a study of money. Money is just sort of a proxy because it's an easy thing for us to talk about. It's meant to be a study of incentives, and incentives obviously include like personal satisfaction and things that aren't necessarily captured in a dollar amount, but could be. And so it's like I'm sort of getting ahead of some people's objections here and saying like, well, yeah, in that scenario, we would just have an asset that tracks a different thing, you know?
Yeah, totally. Or what I talked to Robin about it. I haven't personally spent a lot of thinking about like the non-financial asset use case, because like for us, I mean, we're essentially a corporation. And so like the goal is just increasing the stock value of the stock. But what Robin said is that he would do it, or at least he said what he like his idea was to do it based on the market cap of citizenships. So you would allow people to buy citizenships in your country, and then if an action would increase the total market cap of citizenships, then that's what you would do. Because like theoretically, if you do something bad in your country, then that's going to decrease the willingness of people to like purchase citizenship in your country. Which I don't know. It's an interesting idea.
I think I actually think that's brilliant, right? Like it's a way of saying, so for example, you know, let's use that as let's say before that idea, we're just going strict like, hey, we're going to have countries' decisions be entirely based on GDP. But then someone could argue, hey, well, GDP doesn't factor in like, you know, XYZ of my daily life and whether that makes me happy or not. And so saying, hey, well, instead of GDP, you know, the asset we're going to work with is like, you know, citizenship. How many people want to be citizens of this place? And that's going to factor in a much broader, like, how much do we think this how much do we think this proposal will increase the well-being of people in this country? Because we're tracking how much do people want to be citizens of this country versus not. Which I think, yeah, I think I look, even just talking about it, I am like more and more convinced. And so again, it's all like, I'm so excited to see this experimented with in practice. How like what sort of proposals go through MetaDAO today? Like what sort of things are we discussing and doing these sort of I say hypothetical trades, but they're not hypothetical, right? Like they're
real.
They're real. They just don't settle until after the voting period.
Yes, exactly.
Okay. So like you're locked in to whatever your trade is. It just doesn't settle until like, hey, the voting's closed here. Now we execute all these trades.
And so MetaDAO proposals that are raised to us, it's like project proposals. So someone has something that they think would be valuable to the MetaDAO, then they'll raise a project proposal. that's been done, I think, like 4 times. Invest proposals. So a few people have requested that the MetaDAO give them tokens in exchange for investing or putting money in the treasury. Yeah, I can't think of, but it's a lot of stuff like that. It's like anything that a board of directors would deal with is stuff that the market is currently dealing with, which eventually I'd like to expand. Like the problem is, Futarchy has throughput and it's got latency. Like right now, the throughput is not very high because every proposal you have got to like burn $4,000 or something in open book state rent and Sol, which didn't used to be so bad, but now after recent Sol price is pretty bad. And then you have to wait 5 days, so the latency also isn't very good. But once we could get the throughput and then there's some other factors affecting throughput too, like liquidity situation isn't great, which hopefully gets solved with AMMs and other stuff. But if you could get the throughput and the throughput higher and the latency lower, you could potentially use it to make more lower level decisions. You could like move one level down from being like board of directors level to being like CEO level, and potentially even lower eventually.
Nice.
By throughput and latency, you mean specifically like the ability for someone to publish a proposal and get it voted on quickly and finalized, closed out, all transactions executed?
Yeah, exactly. And throughput would be like how many of those can raise them at the same time. I mean, it's essentially you've just got to like reach. If you could, when I worked in Web 2 as a software engineer, when I did like a decision on something, it would take a manager like a day or so to respond to me generally. And for urgent stuff, like an hour. And then they could probably deal with like, I don't know, maybe 10 decisions a day. So at some point we'll reach parity with that. And that'll be pretty cool because then we'll kind of like replace the manager role with the market. Of course, we also need to pay the market for that to be true, but I don't know how much the pay will be relative to the managerial salary. Hopefully we come out ahead.
That's interesting. Why you're saying you would need to pay the market to make managerial decisions, but isn't the whole point that they're getting paid in the increase in value of the tokens they're trading?
Yes. But conditional markets are just like prediction markets, are zero sum. So every dollar that you gain in a conditional market is a dollar that someone else loses. And just like with derivatives, only with derivatives they're used for hedging, whereas conditional markets most of the time wouldn't be necessarily useful for hedging. And so you're not like sophisticated market actors are not really should not want to trade in zero sum markets. And so you need to like give some incentive to provide either to trade or to provide liquidity. But thankfully, like those incentives can be sustainable because you're getting some value out of that decision making, right? Like today we pay managers and board of directors, right? Both in like stock and cash. And so you could potentially like divert some of that to the market and everyone would come out ahead.
Yeah, I think this is maybe exposing another misunderstanding I have. Nick, I've asked a million questions. Can I ask one more, or are you itching to ask something?
Absolutely, James. I'm just taking it all in. I'm probably about 60% lost, and I'm just like trying to absorb it and process it, and just like take it in. I'm gonna listen to this episode again later.
What do we need to do to get you not lost?
I don't know. I'm gonna go with keep asking your questions, James.
All right. Well, okay. So what I was going to ask is like maybe I have a fundamental misunderstanding of the mechanics here, right? I sort of assumed there's like a meta token, right? And when we're trading, we're making trades on the meta token, which so like I wasn't thinking of it as a zero sum game because we can get more, like the value, the market cap of the meta token can increase. Right?
Yeah, but relative to trading in the spot market, it's zero sum, because like you could just buy, if you believe that the market cap will increase, you can buy in the spot market, and if you believe the market cap will decrease, you can sell in the spot market. And so the only reason you would want to trade, like you would naturally want to trade in the conditional markets, is like, say you're already a big holder and there's a proposal that like, it would make you less bullish on its future. Like I see this all the time. I see like someone on Twitter saying, okay, this happened in this DAO, so I dumped all my tokens, or I dumped half my tokens. So like this could provide you a mechanism for conditional dumping. But like, it doesn't seem like, today Wall Street doesn't sell conditional markets, right? This isn't a financial product that exists today, which is evidence that like there may not be a lot of natural demand for it in the same way that there is natural demand for like options and futures. And so I think, yeah, you still eventually need to pay people.
Got it. So I had assumed that was incentive enough, like the incentive of, oh, I'm a holder and I think this would be bad, and so I'm going to trade against it. Like I assumed that would be enough to incentivize people to participate. And I would assume that instrument doesn't exist for technological reasons prior to now. But you're saying we may also want to actually pay people who participate in these conditional like trading markets.
Or probably the best would be to pay the AMM LPs, because then someone, like, the natural incentive is, if you have an AMM LP, then you just have a natural incentive to trade if the price is incorrect. Like if you go to a proposal and it's like, okay, this proposal burns all the assets, and then the price in the past market is like 2x the price in the fail market, then you're obviously like naturally incentivized to dump, because you're going to be able to buy back at a cheaper price with the proceeds that you got from dumping. And so you'll be like net ahead. But then the LP is getting screwed over. And so, I guess we'll see, like maybe these problems are solved with just scaling usage. Right now, like a bit over 250 people have deposited into the conditional vault. So like a bit over 250 people have used Futarchy, which is kind of cool. Those are like the first 250 people to use market governance in like the history of the world. Unless there was a civilization before us or some conspiracy theory. So maybe it's like, as we scale usage, the problem naturally goes away as well. I don't know, but I just anticipate that we'll probably have to pay.
Okay, I could see it going either way. I will say, right, like I've mentioned already, like I'm not fully convinced, and you asked what would convince me. I think what I'm gonna do is I'm probably just gonna go participate, right? Like I think the best if I look at sort of like past things that I've been like, oh, I'm not sure, the thing that has made me sure in one direction or the other has always just been actually doing the thing. So I may not be early enough to be one of the first 250, but I'll jump in and hopefully be one of the first 300, and like actively participate and learn that way.
Awesome.
Nick, how can we get you unstuck?
I think the question on the mechanics that you actually just asked does help clarify things in my mind. And I think it's like largely just like how my brain works. It's like there's so much of the conversation has been somewhat abstract and like vague in like many ways, of like, and a lot of unfamiliar terminology that I just like don't know and understand. So I think I just need more education.
Yeah, it's a lot of surface area. And like, even for me, when I traded in the fierce Futarchy market, like it finally clicked, because before then, like, I don't know, before then I was actually still pretty skeptical of Futarchy. I was like, Well, like this thing is a very high EV because even if it's low probability, if it does work, it can totally reshape the world. But now I think my probability of Futarchy like totally working and reshaping a lot of stuff is like it's above 50%. It's probably still lower than 80%, but somewhere in that confidence interval.
Oh, that's it. That's interesting. I would have pegged it as even higher. So saying it's under 80 is fascinating to me. That also I also appreciate that though, right? I think a lot of people get really dogmatic about the thing they're working on.
Oh yeah.
And I think we have a clearer head and are able to like make better decisions when we're less dogmatic. So like even recognizing sort of your own internal like waiting for how likely is this versus not, super cool. I like that.
Thanks. Yeah.
Same. I think much like James, I think in the next, I'm just gonna have to dive in and participate some, and I think the act of participation will probably help me get a more concrete understanding of like all of these things all wrapped into one.
You mentioned it, like when scheduling something about like a new voting market that you guys created recently. Is that still something you wanted to talk about?
We can talk about it briefly. I mean, so like, yeah, we launched this vote market called Voda. And the idea is essentially trade your votes for money, governance votes, as like a product that MetaDAO would build and hopefully make money off of. And yeah, I mean, so it exists. You can currently trade your VE Saber votes for money. Um, and the main people that want to buy votes are projects that want to create Saber emissions for their token. So like UXD and Soulblaze were the two projects that funded this. And because they were already doing some vote buying or some, they were playing in this market, and this would make it easier for people like them. But right now, I think we're pretty much focusing all of our like the fact that we have DAOs that are like reaching out to us, and DAOs that I wouldn't have expected to be reaching out to us about Futarchy as a service is like it's a signal that we might be able to get PMF if we don't totally screw up execution, or if we like execute really well, actually. I mean, it's not just going to be not screwing up as the bar. We need to execute really well. But so yeah, I've pretty much like, we're pretty much all hands on deck on building that right now.
That's awesome. I would love to see this executed across multiple DAOs. I think that would be a huge sort of piece of credibility, I think, for Futarchy to see it executed in a variety of conditions. That being said, I think you saw me complaining about the Jupe DAO vote earlier this week or whatever last week. That's like a perfect example of a proposal that I think would have gone, in my opinion, much better with Futarchy, right? Because it would force people to actually think about the financial ramifications of what they're doing.
Yeah.
I mean, I'm a little skeptical of how many people actually read that proposal.
There's like, oh, first big proposal, yay, go.
Yeah.
Yeah.
I mean, I don't know about that specific proposal. Like, I actually think that the incentives personally made sense, but I agree with you that I don't think the vast majority of participants did read it. And like,
I'm not saying I think the result would have necessarily been different. I think it probably still would have passed, especially after all the conversation that happened. I felt like there was a lot of town halls and they discussed it. Like I'm fine with the outcome of the vote, but it was like kind of what you were saying about like the overwhelming majority of it, right? Where it's like I don't think it should have been like a 85% passing vote, right? Like a more realistic split. I think we would have settled on a more realistic split in if we were doing this with Futarchy, where maybe it still passes, but it's like 52%, 56, like something like that feels a little bit more reasonable about the likelihood here. but also it would force people who just didn't read it or just glossed over it and clicked yes to be like, well, do I really want to stake money on this?
Right.
I think you'd probably have a lot fewer people participating because it requires work, right? It's like, well, I don't know, and I'm not going to stake money on this without knowing. So I don't know.
Yeah.
That would have been one I would love to just go back in time and redo it with Futarchy and see how it played out, because that's honestly one of the only DAO votes I've like heavily participated in, where I felt like I felt like I did a lot of reading and like talked to a lot of people, and you know, I was more heavily involved in that than I have been in any vote before. And so it would have been fascinating if we could just sort of like have alternate universes where we saw it play out a couple different times in different scenarios.
Yep, totally. And that's like one of the key issues with voting. I mean, there's a few key issues. One of them is, yeah, like you're talking about you doing all this research, and then there's other people that do zero research, and then the votes are counted the same. And then you have no incentive other than like this external incentive that Jupiter created to research decisions. Like you have a low voter turnout problem. I can't even remember the last time actually I've never voted in a shareholder proxy meeting. So I think just whatever the board wants to do is what gets done. And then the other problem is that there's no incentive to like, it doesn't really make sense to say it outside of a market context, but there's no incentive to price the decision correctly. Like there's no incentive to what you're talking about. Like if, like, say you think the proposal is good, but you don't think it's that good, there's no incentive for you to vote no when too many people are voting yes. Whereas markets kind of in a way solve all three problems at once, because you have an incentive to trade because you can make money from doing so. And we know that people like research trades because hedge funds all do this already. You have a clear incentive to not just only like participate, but to price decisions correctly. And then, I think that like is the core thing. And then you don't really need that much engagement, right? Like engagement is a sub problem. The main problem is you just want correct decisions. And I guess you can make the argument that like maybe if you get people engaged, that makes them use your product more, but I don't think that's very scalable, right? Like imagine if Microsoft was like, oh, look how great it'll be for Windows if we get all these people to vote in our proxy meetings. Like, no, that's kind of silly.
That's one of my least favorite things about like democratic elections, right? Is like these get out to vote campaigns. I actually think might do more harm than good, because you're getting people out to vote who maybe aren't looking into what they're voting, right? So I think it's interesting how you phrase that. It's like a voter turnout's like a sub problem that might not be the most important thing to try and solve.
Right. You do like the main reason why voting, in my opinion at least, and like Ralph Merkel of Merkel-Tree also wrote a really good paper about this. Like the main reason why voting works better than dictatorship in a lot of situations is because like even though the dictator can usually be more qualified and take more effective action, the main problem is that dictators and like people of power tend to abuse that power to enrich themselves. And so democracy helps with that. And so that is another thing that markets are like pretty good at. So like we've already had people try to manipulate Futarchic markets, and it's counterproductive because if you try to manipulate a market, you're a noise trader. Like you're making a trade based on something other than alpha. You don't have any new information. You're just placing a trade. And so like in mature markets, people will actively look for noise traders and make money by trading against them, right? But it's like the mean reverting strategy that Renaissance and all these statistical arbitrage firms have made so much money off of is trading against noise traders. And so like if you try to manipulate a stock, not only will it not work, but like you'll probably get offset within a few milliseconds. And so we actually had a proposal proposal 7, Ben Hawkins, who works for the Solana Foundation, but he just did this as an independent person. He created an investment proposal where he wanted to buy Meta for a discounted price. And he obviously wanted this proposal to get through because, in my opinion, and a lot of other people's opinion, it was a sweet deal for him. And so he spent $250,000 in the past markets, like bidding up the price in the past markets in order to try to get it to pass. But every time what would happen is he'd place these high bids in the past market. So for like a price above the spot price. And then people would be like, oh, sick, I can like sell to him for a price above spot. So I'm like essentially extracting free money from him. And then they sell into him. And then this game repeats. Eventually he's exhausted with capital and like gave up the game. And so, yeah, that was pretty fun.
That is a fascinating example. It's interesting. I feel like I feel like Futarchy would be good. I'm not gonna lie. I'm gonna dig in more because that's a great example of like its ability to combat voting manipulation. So that's really cool. We're just about at time. I want to make sure if there's any sort of last minute things you want to say to our listeners, you get that opportunity. Anything you want to, say to everyone.
Well, what I would just say is I'm going to try to shill you on joining and contributing, or just even participating in the Discord. And so what I would ask the listener to do is just think about like what you're working on in your life, and if you derive meaning from it, and if you could possibly and how really important it is. And maybe like some subset of you will want have an objective function they want to maximize of doing really impactful things. And I think this is potentially a very impactful thing, right? It's been a very, very long time since people changed their fundamental governance mechanism. It was a few thousand years ago, and it may be another few thousand years before we do it again. Probably not, but maybe a few hundred years. And this is an opportunity to direct the course of history if you participate early. And so I would encourage you to think about it.
That's awesome. I will be doing that. So listeners, if any of you would like to follow suit, join me.
Awesome.
I'm genuinely excited. I obviously, I can't promise to be the most involved person, but I'm really excited about the experiment. And so I'm going to jump in and participate in as many things make sense for me to participate in, and see if there's a space where I can sort of help this movement along.
Yeah, just play some trades, participate in the Futarchy.
Awesome. Thank you so much for joining us. We didn't get to talk too much on recording about your you personally. I know you try to keep some of that under wraps, but some of my favorite questions have to do with personal, not life things, but your personal motivations and that sort of thing. I'd love to chat again and learn, sort of more about who you are, what motivates you, what sort of things you're hoping to accomplish with Futarchy in the future, that sort of thing. So would love to chat again soon sometime.
Cool. Sounds good.
Okay. Thanks, man. To the listeners, we'll see you all next time. Take care.
Thank you guys. Bye. Cheers.